Bismillahirrahmanirrahim, boys. We are here with lesson number 6 from the same paper, paper number 1, specimen paper of 2020. So, this lesson is designed particularly for O levels students and especially those who are going to appear in exams. So my name is Masuood Ahmad. My Facebook ID and Skype ID, WhatsApp, my email is here with you. You can contact me in case of any query. So let's start our discussions. So question number 26 is Z Limited provides the following information: issued and paid up share capital, general reserve, retained earning, and 10% debentures. So question is, what was the value of equity? So equity is basically the amount which is particularly related to the owners of the business, mean shareholders. So any type of reserve, any type of retained profit is basically property of owners. So here it was the clue, and just see what is the answer of it. You can calculate and then you see next slide. So it is your answer over here, that is you have to add 200,000 plus general reserve because it's also part of your profit, and retained profit, that is 15,000. Altogether they will become 245,000. C is the option. 27. The issued share capital of DX Limited consists of ordinary shares. The retained earnings were 45,000 on 1st September 2016. These had increased to 75,000 on 31st August 2017. The company earned a profit of $80,000. What was the total ordinary share dividend for the year? So here, boys, we have to look that how much was our earning previously and what was the addition for the year. So if we look at earning starting earning, it was 45, and now your fresh earning is 80. So altogether they formulate 125. Out of 125,000, you just had 75,000 balance, okay? And how much you have paid in this case? You have to calculate the amount by which dividend has been paid. So I guess you got the idea. Once again, I want to repeat my words, that your earning has increased to 75. Rather, it should have been 125,000. Why 125,000? Because 80,000 you have earned this year and 45,000 was already with you. So altogether it should have been 125,000, but it is in fact 75,000 left over there. Means you have drained 50,000 or the amount as a dividend. So your answer is 50,000. Question number 28. A club provides the following information for the year. This is definitely a very important topic, that is NPO. This question is from that area. So receipts, payments, depreciation charge for the year, which will not be included in receipt or payment because it is non-cash item, and accumulated fund at the end. Mean if we say it's a closing capital of that club. Capital is the term which is not used in clubs, that's why they are using accumulated fund. So at the end they have 15,800. There were no accruals or prepayments, and mean all the expenses of the period are paid in cash, all the incomes are earned during the year was received in cash. So all the incomes, basically receipt and payment. Receipt shows your incomes for the year and payment shows your expenses for the year, along with the non-cash expense, which is depreciation. So boys, here next is there is no capital expenditure or capital receipts. Mean all the receipts are Revenue receipts purely they reflect your incomes, and all the payments are shown your expenses for the year. Okay. What was the accumulated fund at the start of the year? Mean your profit for the year was there and it was added to your opening accumulated fund, and then 15,800 your closing value of accumulated funds is being shown. So what we have to do, we have to reverse, we have to subtract. If we made profit from that accumulated fund, then we can arrive at opening balance. As statement shows that by comparing receipts and payment, 16,000 is the amount which shows your income for your only cash transactions are concerned. When you incorporate your depreciation as well, so this 1600 comes into $350. So $350 is basically profit which was added to opening, and then resultant figure is 15,800. So here you have to subtract 350 from 15,800, and then you got your answer. So your answer is 15,450. So next question. A club provides the following information at the end of the financial year. Rent of the premises paid in advance, mean you have prepaid expense. Prepaid expense is it is your current asset. Outstanding subscription, you have to receive subscription, that is income receivable, it's also your current asset. Where will these items appear in the club's statement financial position? Definitely both relate to a same family, and that is your current assets. And next last question here, which is an indirect cost? This question is being asked from your manufacturing account, and as you know that there are direct and indirect costs. Indirect costs, all those factory costs which cannot be traced with the product easily and economically. So carriage inward is, you know, that it is straightway added into your prime cost, and prime cost is direct cost, and your production material is the direct material, and it is also direct cost, and production wages is also your direct cost. It is known as factory cost or direct labor cost. So the last thing over here is option B, that is factory rent. Factory rent cannot be traced easily and economically in the product cost, that's why it is known as indirect cost. So here it is your answer. Boys, in case of any query, you may contact me on WhatsApp. Till next lesson, okay, Allah Hafiz. Boys, it is your 7th lesson of paper 1, and we will discuss 31 to 35 questions. So this lesson is designed for O-level outgoing students, and my name is Masuood Ahmad, and my ID and contact numbers are there. You can contact me if you want. So first question, a trader provides the following information. Opening capital is given to you, and it is 25,000. Closing capital is not given, but assets and liabilities are given to you, and drawings during the year is also provided to you. What was the profit for the year ended 31st July 2017? Why this question is based on your incomplete records chapter, in which you know that net worth method is being used to solve this question. What is net worth? Net worth means closing capital minus opening capital shows your profit if there isn't any drawings or fresh capital. If there are drawings, as in this case, what will you do? You have to find out closing capital with the help of subtracting liabilities from your asset. So you will arrive at closing capital, add drawings in it, and less opening capital, which is 25,000. You will arrive at the answer. So answer is here, that is 21,000. Next question. A business provides the following information. Revenue for the year is given to you, purchases for the year is given to you, and gross profit as a percentage of cost of sales. Mean gross profit markup is given to you. Markup is based on cost of sales. So this question is based on your ratio chapter, ratio analysis. So what was the gross profit for the year? So you have to calculate gross profit in dollars. So boys, here you must recall the table which have been discussed so many times in your class, that is grossing up method. Or here sales are given to you, sales revenue are given to you 189,000. In case a percentage of markup is given to you, then sale value represent or reflects 100% plus 25% or whatever percent is given to you of markup in it. So 89,000 are equals to 125% of cost of sales. So if we divide 189 divided by 125%, then we will arrive at cost of sales. But they are asking for gross profit, not for cost of sales. And simply you have two things over here. The value, suppose it was 150,000 is in front of you. Just take 25% of that, or subtract cost of sales from 189. You will arrive at the gross profit. Once again, I am going to explain that what will you do in this case. Here revenue 189,000 reflects 125% of sales. So if we want to that is equals to 125% of cost of sales. So if we want to calculate the cost of sales, we simply divide 129%, 189,000 with 125%. So we will come to know the 100% of this value, which is cost of sales. So after calculating that value, just multiply that amount, the answer, with the 25%, then you will arrive at your answer. Next question, that is your answer for 33 question. Donald's rate of inventory turnover was 10 times. The 10 times means the cost of sale is equals to 10 times of average inventory. Okay, the inventory turnover ratio, if it is given in times, so it shows that the average inventory is 10 times shorter than cost of sales, or we can say that cost of sale of a business is 10 times of your average inventory. And you know that how we calculate average inventory. Average inventory can be calculated as opening inventory value plus closing inventory value divided by 2. So 800 plus 1000, 1800 divided by 2 to arrive at the average inventory. If it comes I guess 900 is average inventory. If we multiply it with 10 times, then we can find out your cost of sales. So here is your answer, that is 9200. So you may verify it. Okay, let's discuss another one. What is going concern principle? Going concern principle basically states that your business will continue for unforeseeable future. When accountant prepare financial statements, that thing is in his mind that business will continue for unforeseeable future. So your answer for 34, that is accounting records are prepared assuming that the business will continue to operate in the foreseeable future. And 35th is also related to that chapter. Which accounting objective is being applied when financial information? Accounting objective means when you are preparing, being an accountant, you are preparing financial statement, you have set some objectives that the information which are particularly related to business should be included. So question, which accounting objective is being applied when financial information affects the business decision? So comparability is something else. Compare mean you compare this year's sale with your previous year. Okay, that is comparability. So reliability, I am talking about C. Reliability means your information is reliable. If you don't got any source document, you cannot pass proper document evidence, and then he should record. Why it is so? Because if it is not there, just receive a phone call and make a entry in your books of accounts, and it will question our reliability. So our information cannot be. Understandability mean you are writing you are preparing your financial statement in a way which are easily understandable, and if they are complex, then it means your financial statement is not serving the purpose. So as you know that the accounting standards are basically prepared to avoid the complex, to increase the understandability of the financial statement. B, that is relevance. So if so boys, if there is any confusion, I guess in previous question there are as to me it was 9,000 and the answer was 9,000 something. So you better check and then let me know. Okay, till then, Allah Hafiz.